All right, welcome everybody to this new investor series that has been launched by the National Incubation Center. Today we're doing our first talk, which is COVID-19 and the investment climate in Asia. I have a few panelists with me. A lot of the audience, I believe, would know them. Some are new to the Pakistani ecosystem. I'm joined by Ali Samir, who is the director at the management consultancy firm. He's also worked as the CEO for TPLV Ventures, and currently he's heading Jaffam Management Consulting. I have Ahmad Mian, whose podcasts are known to everybody. I personally listen to them a lot. And he's also a partner at Karavan Ventures, which is an early seed investment company. We also have Jeerawat, who is the head of ecosystem and partnerships at Siri Ventures. John L, he's partner at Meet Ventures, and Tiang Lim Fu, partner at SeedPlus. So if I could we could have introductions by Tiang, John, and then Jeerawat about their companies, and just a few words about themselves and what they've done so far. Tiang, if you could go ahead first.
Okay, yeah, I just figured out how to unmute. So Tiang here, I'm one of the partners at SeedPlus. We are a Singapore headquartered seed fund that's been investing in and around Southeast Asia for the past coming to 5 years now. It's a $27 million fund. We've done primarily investments in Singapore as well as Indonesia. And we do have other investments in places like Malaysia, Thailand, Hong Kong, so on and forth. So as the name suggests, we do primarily seed investing, pre-A investing. It's a pretty broad spectrum of investments that we've done. We've done investments in fintech, insurtech. Some of you might have caught that Koala, which is one of our portfolio companies. We led the first seed round, just announced a pretty significant Series A today. It's an insurtech company based in Jakarta. To Engage Rocket, I think they announced their Series A 2 months ago. It's a B2B SaaS company in the HR space based in Singapore. So as you can see, it's pretty biased towards more B2B solutions within our investment philosophy. We've done about 20 investments so far, and thankfully most of them are doing pretty well, even given a current crisis. And we continue to work with them to navigate, the uncertain times ahead. And I think, I would love to learn from every panelist here on how you guys are doing it, right? Because I'm sure this is pretty much abused now, but we all say this is unprecedented times, and it is, right? So yeah, so that's that. And a bit of myself, before SeedPlus, I was an operator, startup kind of co-founding team. I was at a company called Evernote, where I started the Singapore office. And Evernote itself is a Silicon Valley-based, still a unicorn, company. Prior to that, I was in the fintech space, early founding team, mobile payment sector, based in Singapore. So a good mix of operating and startup and investing background. Interesting times ahead. So.
Thank you, Tiang. If John, you can now give a small introduction, just a brief introduction about Meet Ventures and yourself.
Hi everyone, this is John. I'm a partner at Meet Ventures. So Meet Ventures, we are a corporate accelerator. We help corporates and companies around the region to run their corporate accelerator programs. So far, we've run a few. For example, one of them is a blockchain company from China, and another is an Indian company that also runs a 200-man employees firm. So currently, we are helping another Japanese company to enter into the Southeast Asian market. So typically, we work with quite a number of CVCs and also listed firms, MNCs that are looking to expand to this part of the world. A bit of a background about myself. Prior to this, I was in consulting for a while at KPMG Digital Village. And before that, I was at a VC firm by the Singapore government. It's called SG Innovate.
Perfect. Thank you, John. Jeerawat, if you could please.
Okay, all right. Hello, everyone. I'm Jeerawat from Siri Ventures. Okay, Siri Venture is a CVC, a corporate venture capital under Siri. Okay, Siri is one of the largest real estate developer here in Thailand. Okay, we are pretty much focusing on the residential real estate though. Okay, and as a CVC, I think one of a very common characteristic for any CVC, I believe, is we are looking to find some innovation for the corporation first. Financial ROI might come second, okay, and it's the same for us as well. So in terms of type of focus area of solution and startup that we are looking for is mainly around real estate, things like, you know, anything to do with property tech, living tech, construction tech, and right now I think everyone is also talking about clean energy kind of technology to be applied to the, you know, real estate and residential application. I think that's some of the area that we are focusing on. Okay, and a bit about myself. Prior to Siri Ventures, I've been with Siri Ventures for 3 years. Prior to Siri Ventures, I've been with Microsoft for 15 years. Thanks.
All right, perfect, Jeerawat. Ali, if you could please give your introduction to the panelists that have joined us from overseas, and a bit about yourself, and just a small glimpse of what the Pakistani ecosystem means to you.
Sure. My name is Samir Oosman. Currently based out of Dubai, working at a family office focusing on leading the management consultancy side, but focused on SMEs and startups to kind of help them enter markets and raise capital. My kind of experience dates back to being both an operator as well as looking at the investment side of things for early stage startups. I helped set up one of the first kind of corporate VC entities in Pakistan, known as TPLE Ventures, while simultaneously heading their group strategy department, focusing on building growth strategy across multiple industries and kind of using technology as the kind of the backbone. This was across insurance, vehicle, fleet telematics, IoT, digital mapping, and property as well. My history in Pakistan has kind of been kind of working across a bunch of different areas. So I came back to the country primarily at working at a kind of a large impact investment business, focusing on healthcare, education, and food security. From there, moving on to the corporate side of things, into the industries I mentioned, and along the way, kind of helping startups, building startups. So kind of worked with the first food delivery platform in Pakistan, which was eventually acquired by Rocket Internet. Worked with helping some fitness businesses kind of set up boot camp related businesses on the ground before this health craze started. Helped a couple of digital magazines before there was any funding or 3G kind of took hold of the country, and we started seeing mobile first economy and so on and so forth. So I've kind of seen Pakistan's ecosystem in regards to startups, both technology oriented and otherwise, from a few years ago, before kind of it was a buzzword and everybody was getting into it, and it's evolved and come a long way. So for me, I'm very connected to it. I've in some way, shape or form been associated throughout, whether it's, mentoring with, the Indus Entrepreneur Network, or helping work with the board at Injaz Pakistan, which is junior achievement in Pakistan, to kind of working with what we have now, which is a much more robust ecosystem with government-backed and private sector-backed programs such as the NIC, kind of seeing accelerators come through, formal VCs, both in the local structure as well as foreign domiciled funds kind of set up with a focus for Pakistan, bringing foreign capital and investment to the country, and actually kind of helping these startups and entrepreneurs scale with their expertise. So it means a lot to me, and looking forward to the session.
Perfect. Thank you, Ali. A bit about you, Ahmad, if I could just a brief about what Karavan has and how you have invested in Pakistan so far.
So Caravan was started about a year ago with the idea that there's a lot of talent in the country and a lack of resources available to support them. And the idea was, I'm based in Dubai, my brother was my partner, and then Mina is based in Islamabad, and then my brother is also based in Dubai. The idea was, how do you kind of pull in the resources and the community that we have across the other businesses that we have in Dubai and elsewhere to kind of help Pakistan's startup ecosystem. And across the year, we've invested in 3, 4, 5 companies so far. Looking to increase that hopefully by the next year. The way that we kind of work is there's no LPs in our company. It's only GPs, so it's personal capital that we're investing. So it allows us to be a little bit more nimble, write the checks much sooner, and do the due diligence ourselves quickly.
Perfect. Thank you. Thank you so very much, Ahmad. So with the current situation that we're facing, we've looked at COVID and how it's changed a lot of industries. It has hit the transportation industries. It's a multi-phased effect on the entire society. And a lot of people have come together to basically help their own communities and societies. At the same time, we've seen a lot of businesses being hit economically, but at the same time we've seen a lot of businesses that are coming into the boom. So maybe, so for example, automation of machines, so that much less human involvement is involved, is on the rise. A lot of companies are moving towards automating entire industry lines. We've seen in Pakistan at least a growth of a lot of startups that are doing deliveries. People want to go into them. The government is supporting such initiatives. And then obviously healthcare is another domain or vertical where we see a lot of focus is being given in terms of even startups. As venture capitalists and as people, as investors, I'd like to ask this question to basically all of you. How do you see your investment thesis? How do you see your interactions with startups? How do you see the next 6 months for your own venture capitals? How is it that you will basically source deals and look for these startups? Is your investment thesis going to change, for example, and moving more towards doing investments in health tech and the shared economy space where we have more deliveries and even maybe towards automating industry lines rather than doing, for example, before you were investing in, for example, e-commerce for that matter. So how has that internally as VCs, what are the discussions that you guys have? If Ahmad, you could start and then we'll have other panelists to shed some light on this.
So there's a lot of questions that you asked there, and let me try to unpack some of the stuff that I remember. So basically, I don't think our investment thesis has changed. I still think that Pakistan is a very nascent ecosystem. There's a lot of stuff that needs to be done, and that's going to happen across different sectors. What we are actively now doing and what the situation in the pandemic has kind of done for us is that we're now on kind of how do we help save the companies that we have invested in. As you know, a lot of companies have been affected by the pandemic in different ways. Some sectors are doing really well, but some older investments, had they been cash strapped, are not doing as well. So we're trying to see how we can either help them raise more funding or help them with their business processes, whether it be in marketing, whether it be in in opening different lines of business. So it's been twofold. Like one, just understanding how to help those kinds of companies. Second, it's understanding how we can leverage what we have and the capital that the companies have already raised to increase their runway. So in a time like this, you don't know when the next round of funding is going to come from. At the best of stages in Pakistan, you don't know when the next round of funding or where the next round of funding is going to come from. So right now we're just on this phase where we're a little bit more bearish as to how some of our portfolio companies are performing. So that is one side. We are still bullish on the economy. We have just signed on 2 other companies to our portfolio, which we'll be announcing soon, hopefully. One of them is in the grocery space, which is something that has seen a massive uptake with the situation that's going on, and are seeing revenue numbers that were projected for 2 to 3 years down the line, which we're seeing now. So overall, I'm still bullish, with some conservative kind of understanding of there are going to be difficulties going on for future financing rounds, and just seeing how we can kind of maximize that runway for the companies that we have.
Thank you. Thank you for shedding light on this, Ahmad, which was an interesting point that came out of your answer is how an important discussion that VCs are having is how to save the companies that they've already invested in, which was going to be my follow-up question. But I'd like to ask John on how they, as their venture capital firm, are working and looking at how to save their startups and how to maybe even maybe move some funding around to the other ones that are more doing better. What are the strategies that you have right now?
Okay. Maybe let me also share a bit about my thoughts regarding just now about the investment thesis and all, right? So I think on our side, nothing much has changed. We are still looking at early stage companies. But some deals did fall through because of the COVID-19 situation. So for example, previously we were looking at one real estate management startup. They had a very strong team of founders. Their founders previously they own an interior design and renovation firm with 6 figures monthly profits. So they are a SME, that small medium enterprise that has been running for quite a while. Very strong management team, and they managed to work with some building owners and real estate developers to get zero renter and work on a profit sharing basis. So we thought it was a very good deal initially, and we wanted to invest in them, but because of the COVID-19 situation, things didn't go through, and everyone's like shelving their plans. So we did see some companies like that. As to how we are currently helping other companies in our portfolio to tide through this situation. There are a few companies previously in our some of our accelerator programs. Some of them were like in medical tourism. Initially, we thought that medical tourism would be a good industry because with the COVID-19 situation, people might still travel around for medical help. But because of all the lockdowns and all, they were affected as well. What we have been trying to do for them is to get the startups to pull together and to support each other by introducing their potential investors to each other, introducing potential deals to each other. I think the way that we operate is very different from other VCs because for us, we are more like an accelerator. So every startup that comes through us are actually part of a cohort. And where we are trying to work on this right now is to bring together this entire cohort to support each other. We have startups from each cohort coming from around the region, especially in Southeast Asia. For example, in the previous cohort, we had startups from Malaysia, startups from Vietnam, startups from Singapore, startups from India even. So helping them to tap on each other's networks and from there to support each other in this growth stage. I think it's one of the things that we are trying to champion for. Yeah.
All right, thank you. Thank you for the shedding light on that. Tiang, if you would like to answer this question now.
Sure. So I think what has been said has been repeated many times on social media, on the internet, right? Sequoia's written a memo that everyone cites from. So I don't think I need to repeat myself on. It is about conserving cash, making sure that the balance sheet is healthy, and making sure that you don't die. Because in a situation like this, the name of the game is quite simple, right? It's just not to run out of cash, right? So rule number 1 is to survive. And rule number 2 is to find ways to win, and so that you prepare yourself after the crisis. You're in a position where you can win and build a category-defining business. That's what it is, right? But speaking through the lens of our own portfolio here, is actually pretty interesting because one thing I realized is that companies which we thought that are not performing, even before the crisis, they're not going to perform anyway. So the crisis actually forced a lot of underperforming companies to die faster. In some sense, that's a net positive thing because it clears out bandwidth on the stakeholders. It clears out liquidity in terms of talent. Very talented founders can go on to work on more innovative solutions. Very talented employees can go on to join forces with other startups to continue to grow. So that's one. We also saw that, of course, most companies are suffering to some degree. Some are suffering, revenue drops of 5 to 10%. Some are even more drastic in terms of revenue drops, coming through the demand shocks, especially if you're in sectors like mobility or you're in travel. We saw some revenues drop as much as 90%. That's a low. It's really, really unusual, right? But quite thankfully, whether by sheer luck or good planning, a lot of these companies that we have in the portfolio, the balance sheet is still quite healthy. So from a runway perspective, they are able to, once they optimize, burn on the cost side, at least sustain the company for another 12 to 18 months. So that's something that I think in these times is especially crucial, right? And we've also seen some companies that because of the situation, they're anti-fragile. They're in business models where it's exactly what the time needs. Especially companies in healthcare, companies in digital marketplaces. They're doing. At one instance, we have a marketplace company in Malaysia. They're seeing GMV growth of 30 to 40% before and after and during the crisis, simply because they've invested a lot of time digitizing their processes, helping their clients digitize their processes, and manage to secure a portfolio of vendors that other e-commerce marketplace they can't supply to during the Malaysian lockdown. So they're doing much better than ever, right? So through that experience, I think a few advice that I could offer here is number one, really make sure that you are looking at your balance sheet in a very honest way, and just assume that growth will not resume back to normal levels even after the crisis for some time being, right? I think being brutally honest here is the first key to unlock a lot of different decision making and scenario planning. And once you take a very honest, hard look at that, there are only two pathways here, right? Either A, you find way to go into sustainability, where at least you get the company into a cash flow positive situation, and once you have that, it unlocks more optionality in terms of fundraising or going profitable or what have you. Or you should have enough cash runway to start looking at strategic options, right? And there's no ego in admitting that maybe it's just bad market timing. I can't sustain this. So let's make sure that the employees are protected, your stakeholders are protected. Make sure that you have enough runway to explore maybe strategic M&A options or partnering options with other companies, because these are really quite unusual times. But the key there is really work with your stakeholders and be really honest on the situation, and making sure that all options are being explored. So.
On this.
No sound.
Is this still going on?
Yeah, I think so, but
Yeah, I think probably there's some disconnection.
yeah.
Funny.
Hi, I believe there's some internet issue at the end of Ahad. Just a second, sorry, he's joining in. By the way, guys, hi, I'm Fasi Mehta. I'm the head of the program at the National Incubation Center. It's a great discussion
nice
that you
to
guys
meet
are
you.
having. Yeah, pleasure to meet you guys as well. I believe Ahad has just joined us in. Ahad is back.
There's technical configure issues sometimes that we challenge. I start to fix this. You can go ahead and fix something else. Always happens, no matter how many you try and test it. But yeah. Yeah, so can you hear me now, Ali?
Yes.
Yeah, perfect. So my question to you, since you've worked a lot with the Pakistani startups and you've tried and established them, a few of them personally, I know that you've helped a lot in sustaining their operations as well. So from the eyes of a management consultant and as well as a venture capitalist, what do you think are the key takeaways facing the COVID situation in Pakistan for startups in terms of raising the next round? Because a lot of them might have burned out their money by now or have in the process of burning out money. So in the next 3 to 4 months, how should start scouting out
So I'd echo a lot of what everyone else has said, right? Including what Ahmad and John and Tiang and everyone has said. It's pretty much the same across all markets, and that's what we're seeing. Working with different investors across different markets, and therefore getting exposed to startups that are part of portfolio entities or coming directly to us. Pakistan is no different, but Pakistan, being in the fact that it's much more nascent, there's a lot of verticals that still are very, very underdeveloped. Financial inclusion and financial services being the primary driver of kind of, digital growth across ecosystems. A lot of startups in Pakistan are having issues. Now, just to kind of dovetail from your earlier question and lead to what my answer for this would be, everyone's right. Everyone's rationalizing their portfolios. Everyone's who's invested in companies is probably doubling down into their investments much sooner than they had planned, because they realized that raising capital for those entities is not going to be easy anymore. There was already a kind of shift in the venture capital ecosystem globally, right? You had started seeing a lot of investments that were not showing results, exits that had happened in the US market that saw stock prices pretty much crash. The business models were flawed. People were kind of slowly looking at drifting away from this hype-based cash burn kind of model. And there was an inevitability that the VC ecosystem, by and large, was going to now start focusing more on, positive contribution margin, positive GP margin kind of businesses with a clear path to profitability over an X number of years. And if the founders were unable to kind of prove that or show that or put confidence in that, there were people already looking at those investments as risky bets if they couldn't see it, right? That change is, I feel, accelerated globally because of the COVID crisis, because funds realized that fundraising is tough. Corporate ventures that were funded by corporates and large organizations don't have profitability metrics lined up and their projections lined up the way they expected it to be, and therefore they will have difficulty funding their corporate VC side over the next couple of years. All of that impacts, it's a cash crunch pretty much, right? Even before COVID happened, you saw a lot of the large ultra high net investors globally kind of liquidating their assets because they wanted to hold on to cash in case there was a recession coming. So keeping that in mind, what we've done and just touching on some of what everyone else has said, is we realize, working with a lot of investors, that there will be a lot of write-offs over the next year or 2 years, because investors themselves are going to rationalize their portfolios. They're going to look at what they want to fund that they think could make it, either because they've got a boost during the COVID period, or that beyond COVID also the investment that they've made is innovative enough where it's going to change the world or change the industry and so on. A lot of the businesses that I think investors will, after rationalizing, realize that it's going to be tough making it or raising capital for, they they might just let them run its course while getting physically involved with those businesses to help them extend their runway as much as possible to give them the best chance to make it through, because nobody really wants to write off a portfolio company at the end of the day. Now, bringing that down to Pakistan's context, we're talking to, I'm getting inquiries from lots and lots of startups, right? And they're saying, what do we do? We need capital. We had built this model. Everybody else seemed to raise. Look, the reality is also there was a bubble, and 2019 Pakistan saw a rise in valuations that, to be honest, I don't necessarily personally agree with, because we don't have certain base metrics to kind of validate that, right? We just don't have the stickiness yet that would command a 20 million valuation on for most investors, right? Even internationally. So I feel like that rationalization has happened all of a sudden on valuations as well during COVID, and valuations will be low for people who are fundraising and manage to raise capital. They're not going to be able to inflate it and get capital as easily as they thought they could. But that also means for startups to look at their businesses and see, do they really need to raise capital right now? I feel if you can help your businesses, and we're doing this in Tiang and John said, if you can find partnerships where you can leverage your expertise without having to over diversify in an area that's not really the core of your business, but can add value to your proposition or add value to your customer or your experience, then explore those partnerships and those opportunities, because it will save you time, money, and potentially expose you to a new customer base without incurring any customer acquisition costs, right? That's a great way to extend your runway. The other thing is looking at your systems. In Pakistan, unfortunately, a lot of businesses, because of things like cash on delivery, because of just bad payment cycles in general, businesses see receivables anywhere from 60 days to 120 days, sometimes 200 days, right? That can kill your business. That cash crunch in this economy will kill you. So how do you move towards more digital payments to take cash advances? We're seeing e-commerce companies now that are taking advance payments on their orders, which is something they had never done and they never thought the consumer would do. But because the consumer is forced in this ecosystem and this environment, they're actually seeing not only their sales and their GMV and their orders rise, but they're seeing brands now willing to partner with them actively like they would with distributors before, but now this time as e-commerce entities, because guess what? These guys are in power today. Where they were just as an afterthought for distributors and large brands as a distribution channel before, now they're like a primary channel for them, right? So they're able to negotiate favorable terms, and therefore where logistics partners on cash and delivery would hold cash before, they don't have that issue anymore because customers are willing to pay upfront for it, right? So these are all different ways that they can look at in terms of their receivables, their cost controls. And by cost controls, I don't mean firing your staff, right? I mean actually looking at your processes, seeing where you can save cash to extend that runway, because the reality is this may be an anomaly and this may be something that's impacted the world economy and impacted Pakistan as well. But it's not something that's here to stay. There will be changes as part of the new normal, but I personally believe all these changes will benefit all technology-oriented businesses. I don't think they're going to affect them detrimentally over a long period. I think if anything, adoption is sped up. If anything, policy making and regulation in terms of regulators is seeing a lot more attention because they need to solve this and there aren't rules and regulations and people don't want to be penalized. If anything, there will be favorable taxation. If anything, you're seeing governments, even like Pakistan, being, or at least in discussions of finalizing deferral payments on loans. And all of this is going to make it possible to come out of this well and potentially thrive. But it's important that startups, like I said, if they don't need to raise capital, they shouldn't, because they shouldn't waste their time trying to chase money that everybody's trying to chase and it's already in short supply. They should internalize, they should extend their runway, they should look for opportunities. If anything, instead of a pure pivot, what it really does is a lot of startups are over diversifying, trying to find value, right? So if you were trying to be a fintech, if you didn't really have to be a fintech because it would increase your valuation and you could raise capital from someone who invests in fintechs. This is a time for you not to do that. This is the time for you to really focus on your core proposition, to focus on your core innovation, and extend that runway through looking at maximizing and optimizing your kind of operations, using technology where possible, partnerships where possible, to kind of give you the best chance of success out of this COVID situation.
Perfect.
So that's kind of my view.
Perfect. Thank you, Ali, for such an elaborate answer. Jeerawat, what are your key takeaways to the startups or advice to the startups that are raising investment? I'd just like to bring here another information that has come to my mind while I was searching up for things that what the after effects of COVID-19. And there's this, and in France, they have this VC hours, virtual VC hours set up now, which is in the news these days, where any startup can just go open up a Calendly link and set up a time with any venture capitalist in the world or in France. And they could just have a 30 minutes conversation on that. They give key takeaway advices. So are VCs in Thailand taking such opportunities, and even in Pakistan? I'd like the rest of participants to shed light on this when I ask the next question. But at the moment, Jeerawat, if you could just tell me the key takeaways and answer part of this question as well.
Okay. I personally can't agree more, with Ali, because I think at this point in time, it's very important for the startup to, first of all, be really customer focused instead of, fundraising focused. And in order to do that, to survive, you will have to really look into your core competency and probably try to find some way to pivot, based on that core competency. For example, some of the startup in my port, okay, one of them doing kind of like a home cleaning service, but the thing is that their whole back end system is a very intelligent kind of resource management and resource allocation. What they are trying to do now in order to survive is to open up that back end system, because previously they just use it for their own management of their, housemaid resource kind of thing and technical resource kind of thing. And right now they are trying to open that up as a kind of like a resource management service, as a service to other startup and to other corporation to be able to leverage as well. Okay. Another example is one of the travel tech startup that is in our port. That right now the traveling is kind of like going down to almost zero. Okay. But the thing is that because right now in Thailand specifically, the government is forcing a local privacy law, a new local privacy law, and forcing everyone to comply. Okay, and this our travel tech startup, they have gone through the length and study very hard with that new privacy law, and right now they have become one of the local expert on that one. And that they are thinking, they are trying to pivot and trying to come up with a new service, for SME or even other startup to get on board with that new privacy law easily. Okay, I think this kind of thing is show the tenacity of the founder, the quality of the talent, which if they are good enough, they won't give up easily. They will try their best, to survive based on their core competency, based on their experience or whatsoever. Okay, so I think that's the thing that the startup we have to look into. Okay, another thing I would like to suggest to everyone is that with this COVID-19 and with this kind of work from home things that everyone is doing, okay, I believe that many of the startup and even the corporation found that actually they might not need that much office space as before. For example, like many local Thai startup have a discussion and discuss about this kind of like a new finding that, hey, I found that I actually can reduce at least half of the office space that they have rented before because of the work from home. And actually many of their staff are willing to continue work from home even after COVID. So, this kind of thinking and this kind of find a way to reduce costs. I think this is also a very good opportunity for them to look hard into this kind of thing as well. Okay. And okay, to answer your other question, Ahad, about the the venture capital in Thailand. Yes, actually, right now we have a discussion locally in Thailand that to have kind of like a virtual stage, okay, for the startup to do some like 10 minutes, 15 minutes pitching, okay, to the VC, try to do some kind of matchmaking. Initially, we are trying to do this to help local startup first, but I don't see, I mean, any limitation. I mean, once it's go well, why not? I mean, it's okay for every VC and from everywhere as well to open this kind of stage up to everyone, you know, from around the region and from around the world, because I believe at the end of the day, as a VC, we are also interested to invest in, you know, in anywhere in the world anyway. Okay.
Yeah, perfect. And with the current world being a global village, I think this is how venture capitalists will get more access to startups that are from other countries, be accessible to ideas that they were not accessible to in the future. And yeah, so we have a question, one question from the audience. It's why would you invest in a startup that does not have steady revenue, customer base, unless the idea is 1 in a million success story? The point being, should startup chase customers first or the investors first? This question is for all the panelists, and I'd like Tiang to start with the answers for this question.
Sure. I think so. I think really the key here is to focus on what's the point of doing a startup to begin with, right? You know, the point of doing a startup to begin with is that you could build a successful company, and by definition, a successful company is a successful business that needs to make money, right? By creating valuable products and services, you know. So to that end, I think really it's about focusing on from day zero, what value are you creating? You know, what's the product or service that you're working on, and how can you make sure that that value is created on behalf of your customers, right? And if you think about it that way, then I think the logic is pretty clear. You are really, you know, trying to build something that someone else wants, right? And the role of an investor then is to make sure that we give you enough resources to help you realize that mission and vision, right? Nothing else, you know. Unfortunately, the world is not that perfect. You know, sometimes some startup founders are really good at storytelling. And don't get me wrong, I think storytelling is really important. I think the way you articulate and communicate your vision is really important, because that's really part of the job. But some founders, they do it to such an extreme that it's sometimes reality that does not catch up with, you know, the storytelling, right? And that's where trouble happens, you know, and investors get caught up with that, right? I don't think any investor would intentionally want to invest in a company that has no predictable or stable revenue. You know, even if you don't have revenue now, I don't think any investors will want to invest in a company where you do not see this company turning into a real business, right? But most of the time, especially in the earliest days, if you're fundraising, you are investing in a promise, you are investing in a vision, you are investing in the team, right? And, you know, the judgment then is whether you are able to help the founders realize and turn that vision into a reality, right? And a lot of the times it really boils down to the investors' judgment of the founders as people. So going back to basics then, right? It's really about investing in, you know, talent where they are really passionate, with high integrity, with high work ethics, you know, and respect for stakeholders, you know, and being very professional at that, right? No, and I think most of the time when investors end up investing in and make investor mistakes is because, you know, you get too greedy and try to believe in a vision that might not happen, but because of, you know, quite similar to other kind of investment activities, fear and greed, right? You know, you're fearful of missing out on the next big thing, and you get too greedy on trying to make short-term gains really quickly. That usually helps push you into making wrong decisions, right? And this applies to venture investing as well, you know. So yeah, summarize, I think ultimately, you know, as a startup founder, you should focus on creating value that your customers would want, right? I think investors come second. And as an investor, you should really focus on making sure that your judgment on the company and most importantly, the people is the right call. And you want to invest in people that you could trust, right? And that's super important.
Perfect. Thank you. Ahmad, if you would like to also answer this question and give your 2 cents on it.
I mean, I think Tiang said his answer kind of was quite comprehensive. I do agree where people should definitely work on product and on the business first. If you don't have that, it would be very difficult to raise funding. Secondly, I think people also start, like in an ecosystem as nascent as this, people need to realize like VC investing becomes like a stamp of approval, and people need to get away from that and maybe look into building product, looking at friends and family, making sure that this is a product that is actually viable, it has customers, and look at coming to VCs at a later stage. Like people misconstrue the fact that, oh, we need to raise X amount of dollars and only then will we be looked at as a viable company. Whereas you could take $100,000 from friends and family, own the full percentage of the company, and create something that'd be much more valuable and give you much preferential terms with venture investing when actually you get to that point. So to answer the question briefly, it would be work on the product and have a business before going to look into raising money, because that itself is a job as well, which takes a lot of time.
All right, perfect. Thank you, Ahmad. So my question now to Ali is, given the low purchasing power for many innovations that create value in Pakistan, would it make sense for investors to take a Pakistani startup to launch from abroad, for example, Thailand, Singapore, Dubai, or the US?
Could you just repeat that? It got cut slightly.
Yeah, so my question is, given the low purchasing power in Pakistan for many innovations that create value in Pakistan, would it make sense for investors to take a Pakistani startup to launch from abroad, for example, Thailand, Dubai, the US, Singapore?
So there's a couple of, so from my point of view, there's a couple of ways to look at this. So are investors looking at parent entity or holdco structures registered in foreign markets currently for Pakistani startups? Yes, that's already kind of happening because it helps them raise capital from foreign investors who still aren't confident enough in Pakistan and therefore want to invest in it. This is something I say because it kind of touches upon Pakistani companies already looking at having some sort of a structure abroad, which will eventually help them scale across different markets, right? Because they want to raise capital from abroad. I've seen, at least personally, this narrative slightly change. 2 years ago, about 2.5 years ago, everyone was like, oh, Pakistan, we don't want to invest. It's not ready yet. We're still trying to see how low the dollar rate goes, so on and so forth. Then it kind of stabilized at about 155-ish. And people are like, oh, it's also actually gained a couple of rupees. So you know what? Now let's look at Pakistan. So all of a sudden you started seeing foreign investors looking at Pakistan. Now again, the situation's changed. You've lost 15 rupees over a matter of weeks. People are like, okay, wait, maybe it wasn't ready. And, you know, COVID can impact every country, but, you know, this has been a pretty dramatic impact and it might just get worse. So foreign dollars are hard to get. Easiest way that people and investors that I've spoken to who have deployed capital are doing that is trying to find some sort of structure abroad so that they could help raise the larger rounds from abroad, because you just don't have that kind of risky asset class capital available in Pakistan right now, at least at that quantum, right? That they would need to scale at that level. On unlocking value, there is some truth to this, right? This is something that we talked about, right? If you have 100,000 active users and they're all paying an average basket or ticket of $50 per user, is it better than having a million users that are just paying $1? Yeah, I mean, it is. And is that going to create more value? Of course it will. And should Pakistani startups chase that? I don't think so, because I believe in the technology disrupting Pakistan as a country. I believe that unlike a lot of developed markets, Pakistan doesn't need to find growth. We don't need to find growth, right? Because we're so undocumented that technology businesses are going to document our economic activity and we will find growth. We'll just record the growth that's there, right? It's just under the surface. That's kind of an advantage we have to a lot of other countries that have kind of already found that growth and recorded it, and therefore they're now struggling to grow year on year. We have kind of an advantage in that respect, right? So I think Pakistan is an advantage for that reason. Pakistan is an advantage from your cost perspective. You have some really good engineers, you have some really good data scientists. They're all very cheap compared to what you would hire them abroad. So I think there's a huge benefit in having a large chunk of your business in Pakistan. But depending on your industry, how it's impacted by policy, regulation, and growth, or things like financial services and its impact in Pakistan, yes, that may determine whether it's better to go sooner rather than later to another foreign market. I think that's the way to kind of look at it. So it's an industry to industry situation, right? For example, B2B. There's a lot of B2B companies that have come out of Pakistan and a lot of founders that have done really well, but they found their success in terms of exits not in Pakistan. They found it abroad, because unfortunately Pakistan just isn't up to that industrialized or industrialized level where there's enough technology transformation for a B2B software entity or a cybersecurity company to really make revenues in Pakistan. Our corporates and our businesses just aren't there yet, right? So they found their business abroad because that's where their market was. They had a great innovative product. It was a global product. They found their market abroad. They exited in the US and they've made a lot of money. And now these entrepreneurs realize that their back office teams, everyone that supported them, everything that was actually created was created in Pakistan itself. So now they're coming back with their capital and they're reinvesting and they're looking at the next stage, right? So I think in a nutshell, I don't think companies should chase it. I think it should be industry and startup dependent, whether they should look at that opportunity and how they should time it. But I do believe there's value in scaling outside the country and taking on other markets, because if you're a product that's going to be truly global or truly regional, every market operates differently. So not only does it unlock value for you in terms of valuation, but it also means, you know, learning a new market and how that operates and the challenges associated with it. So I think it may be too early right now, but I think eventually that is something that we're going to start seeing happen in the Pakistan ecosystem.
Perfect. Thanks for such a detailed answer, Ali. It answered a lot of my queries that I had apart from this question. Yeah. So another question that we have for Jeerawat, Tiang, and John is that, are you looking into the Pakistani market and are you looking into investing into the Pakistani market as of yet?
For me, not yet, but
okay,
maybe in the near future.
All right. What about you, John?
So far at the moment, not really. Focusing more on Southeast Asia, but definitely keen to find out more and learn more about the market before we enter.
All right. Tiang?
Yeah, I have no idea. Should I? So I've been hearing a lot of good stuff about Pakistan. You know, I think what really, you know, piqued my interest was the 12 million Series A round by first round capital into Airlift, right? You know, that definitely piqued my interest. And actually, and unfortunately, Pakistan is a bit under publicized in terms of the market potential. $200 million population, maybe more than that. It's actually comparable to Indonesia, right? And comparable to the US in terms of size as well. So I think it's a pretty promising market. You know, I'd love to learn more. Unfortunately, I've never been to the country. You know, so and the current situation makes it slightly more difficult. But you know, I look forward to visiting the country soon and just try to learn more, right?
Perfect. All right. So my question to Jeerawat and to John is why have you not yet considered Pakistan, and why is it that you never thought about Pakistan to date?
I think for us specifically, because I mean, we have some specific area that we are looking into, okay? Because, you know, as I mentioned earlier, that we are focusing in property tech, living tech, clean energy kind of thing. And frankly, so far we haven't heard any, you know, outstanding idea out of Pakistan just yet, okay? So that's why I think not yet as of now, but maybe if we have a chance to study more and learn more about Pakistan ecosystem, yeah, I think that could open up the possibility for us as well.
So apart from a big startup coming out or a unicorn coming out of Pakistan, and this question is for you as well, John, to answer. What are the key indicators that would change your decision to invest in Pakistan?
I guess I totally agree with like what Tiang said, and you know what Jeerawat mentioned just now as well. Pakistan is definitely a very interesting market. For us, the reason why we haven't really went there yet or look at Pakistan as a market yet is more of due to internal constraints. At the moment, most of our partners, we are more familiar with the Southeast Asia market, and that is the reason why we are putting a bit more focus on this region. Meet Ventures by itself is only a 2-year-old entity, and we haven't really been there as long as, for example, like Sequoia Capital, etc. And that's the reason why at the moment we are still focusing a bit more on Southeast Asia market. But at the same time, that's not stopping us from researching more into other markets such as Pakistan, such as slightly further markets, like even, you know, in like Korea, for example, we're starting to look at it. So I do see a lot of promise in the Pakistan market, and would definitely love to continue to find out more, learn more, and stay in touch with you guys.
Perfect. All right. I have one more question from the participants, and it is, would the investments already made in startups be changed or modified due to impact of COVID? We've partly answered that question, but I'd like all of the panelists, starting from Ali, to give small briefs answers of about the investment thesis in terms of startups and how it is modified due to the impact of COVID. In terms of even, say, for example, companies like Siri Ventures, for matter, if they come into Pakistan now, with startups coming out because everything is digitally connected, and now with the global village and solutions and developing Pakistan, would they be able to invest into those startups? You could answer the question first.
Sure. I don't think you can change an investment once you've signed the paperwork and deployed the capital, to be very honest with you. I just don't think that's possible. But can you decide to pull out of something if you shared a term sheet? Yeah, I think so. I think that might happen. Because I don't think it might happen, to be honest. I think if it had to happen, it's already happened in the early stages of this COVID crisis, when people were kind of in the process of negotiating a potential investment with an investor, and then they decided, no, wait, things are slowing down, everything stopped, maybe this is going to impact the industry, capital's not going to be able to pull back a term sheet. I think that's happened, and I don't think it's going to happen much anymore, because we've kind of gone past 2 months of this crisis. I don't think you can change an investment once you've deployed it, because you've deployed it for a purpose, you've agreed all your warrants and rights and kind of deployed, if not the entire investment for the first tranche, right? So the business is going to use it for what it wanted to use it for, what it's intended to use it for. I think, just as we've all touched upon earlier, as a portfolio entity at this stage, you can help it kind of extend its runway as best as possible. thesis might change overall for investment, but again, I don't think you can change an investment.
Agreed. Ahmad.
Sorry, I was muted. I agree with Ali. I don't think the investment is going to change in any of the companies for us or for any of the investors. I think it just makes people more precautious, take more precaution in future investments. But so far, no.
Perfect. Jeerawat.
For us, at least, right now we are actually slowing down our Q2 funding. Okay, but I think in Q3, let's look at it again, and we might be able to move forward. Okay, and I think another thing to consider is that right now we are discussing about the post-COVID kind of scenario. Okay, what could be the focus, how the society will be changed. Okay, for example, things like touchless society, people don't want to touch anything if not necessary. Okay, I think that's the thing, and that is the solution we will be interested in. Okay, I think that's the way it is right now for us.
All right, Tiang.
Well, unfortunately, I think so. I think for the most part, things are kind of I don't want to say business as usual, but investors and VCs generally, they try to do good by their word and promises. I think most people try to be good actors in the ecosystem. But unfortunately, I have, in Southeast Asia at least, seen one or two cases where investors offering term sheet before the crisis was in full swing, and now trying to change the terms of the term sheet when the startups are already planning based on the term sheet, right? So it's like I've seen cases like that. I've even seen cases where investors started due diligence process in October, now trying to even pull out the round, after 4 or 5 months of intense due diligence. So, I mean, of course, a lot of these things are quite circumstantial, but, generally speaking, I think most VCs are quite wary of, their reputation. Because I think in the venture investing game is actually a very interesting one, right? Where your ability to make good investments, of course, rely on your judgment in the team, the product, the opportunity. But in some sense, it also relies on you being a good actor in the ecosystem, because an investor with a bad reputation will not get good deal flow, right? Good founders will not want to work with you. Other co-investors wouldn't want to invest in you. So even if you might make money from this one investment, you might not be able to be successful over the long term. And I think the dynamic of the industry is such that hopefully it rewards long-term good behavior. So I don't see any short-term behavior so far that's pretty widespread, right? Even in the crisis, which is a good thing.
All right, thank you, John.
Well, I guess all the other panelists have already shared most of the thoughts and agree with most of them. I think the only thing here is that apart from investors, I think the startups themselves, if they are just starting out, and if let's say we are talking about a seed stage startup or pre-seed stage startup, they also need to consider whether this is the best time to enter into a business, and with regards to their own business model, whether it's something that's viable for the next 1-2 years. So we do have startups coming to us previously at a pre-seed stage, but due to the COVID-19 situation, they decided to shelve their plans for a while. And I think that's a wise thing to do as well.
All right, perfect. So I guess there's only that this is the last question that we're taking for the panel discussion, and then we'll close. It's what would investors recommend people keeping COVID-19 in mind that are looking to do a startup now? Should they wait for COVID-19 to get over, or should they start developing their products now? We'll start with you, John.
Okay, so I guess it's a little related to what I just shared just now. I guess it really depends on what kind of business or what kind of startup they are running now, right? I mean, if they are coming out with a new vaccine and is high chances of the vaccine coming through, then definitely, right? I mean, but for many other businesses, if let's say right now you are intending to start a travel startup, for example, and you have no idea how long these lockdowns are going to last, then it might be wise to really think through it more carefully, because there are many factors that could be unexpected down the road, right? So you really want to think through carefully before you jump in big. And this is a commitment that you're going to make for the next minimally, 2 years or so. And I'm guessing that you are making some personal sacrifices to do this. You are pouring in quite a bit of your own money. You are going to take money from investors, from your family or friends to start this. So think through really carefully whether what you are intending to do, is it in line with current market situations? Before you make the jump.
Perfect. Ali, would you like to shed some light on this question?
Yes, I pretty much agree with John. I'd just like to add maybe a slightly more opportunistic kind of twist to it, which is there are opportunities right now. There's like COVID has brought to the fore some crazy realities, and this can go beyond anything, right? So it's everything from location-based services to health on demand. There's a lot of gaps that people have noticed that are available, right? Even from vaccine tracking and so on and so forth. There's a lot of gaps that not just globally, but regionally and then locally, governments and companies and industries don't have. And they've found that a challenge when trying to deal with this pandemic. So I think if you're someone that's identified a gap that you think could gain quick traction in this COVID environment, but also be lasting post-COVID, I don't think you have anything to lose. You have enough, work from home has given people 24 hours access to kind of play around with their kind of 9 to 5 work schedules and give themselves extra time to build products and kind of put in process flows and customer journeys and do all of that stuff. So if you've got something, you've identified it, build it. I don't think why you should stop.
Build it, that's your advice. Perfect. Thank you, Ali. Ahmad.
I'd say start working with this mindset, with the fact that one, you're sitting at home, you're not doing anything, and you want to get into starting a company or working on an idea. I think there shouldn't be anything stopping you. I mean, the mindset that you'll go with will be much more frugal, and it's going to be much more bootstrapped, which will make you stronger coming out of the situation that we're in. So I think this would put into your company that you start culture and ideas, which will help you kind of grow and be ready for whatever is to come later, the new normal.
All right. Jeerawat.
Yeah, don't stop, just developing, but keep in mind about the post-COVID world, okay, and trying to develop something for that.
Tiang.
Yeah, just don't stop.
Yeah, I keep laughing because it's kind of true, right? In Singapore, we're locked down at home for coming to a month now, and there's another month to go. What better use for creativity than starting a company and business right now, right? I always think back to Hard Things About Hard Things, the book that Ben Horowitz, from Andreessen Horowitz wrote. It's quite interesting because one lesson that I kind of took away from the book was, investors, we think in terms of probability, right? We think in terms of probability of success. It's all if we make a certain decision, what's the likelihood of me winning here? Is that 90%, 20%, right? If the odds are 99%, then hell, take my money, right? Do what you want with it, But as a founder and entrepreneur, you try to be deterministic, right? The moves that you make, if you want to succeed, there's only one way to do it, which is make sure that you succeed, right? However low probability of success that is, and that's a mindset I think I find fascinating and actually really admirable, for a lot of founders that are still soldiering on, building their businesses, making sure that the companies won't die, and also founders who are starting companies right now, right? Because however bad times look right now, there is a lot of local maxima that one could optimize for, and you just got to be deterministic in a probabilistic world, right? So to me, I'm an optimist. I'm the optimist by nature. I just want to make sure that innovation doesn't die and people continue to build, right? So go forth and build, right? Don't be daunted.
Perfect. Thank you everyone for joining me. Thank you, John. Thank you, Jeerawat. Thank you, Tiang. Thank you, Ali. Thank you, Ahmad, for taking time out and spending a little time with us. Hope to team up with all of you and all the participants that are watching and will be watching this video stream. Hope and looking forward to teaming up with all of them. Thank you so very much, guys.
Thanks, Ad.
Thanks for having me.
Nice
Hope we
meeting
can share a
everyone.
cup of
Thank you.
tea soon in person.
Absolutely.
Bye. All right, perfect. We will.